Okay, good evening, students. Welcome to the session. So today we are going to start with international tax class. Okay, so let's get quickly started. So this is about the non-resident taxation. Okay, now in the non-resident taxation, if you remember, we had done the residential status already as a part of the residential status chapter. For the individuals, we have already done it. So I'll just quickly recap it for the purpose of revising with you guys. And then we can proceed for the residential status of companies, which we have not done elaborately, which is what we are going to do in today's class. Okay. So let's get quickly started. Yes, good evening, Viraj. Good evening, Geeta. Good evening, Kaushiki. Yes. Okay. So let me just open up here. The non-resident taxation. Okay. So let's get quickly started. Are you able to see my video? Okay. Yes. So non-resident taxation. Now, what we are going to start with is basically the residential status of the individual first, and then that's what we are just going to quickly revise it. And then what we are going to do is we are going to then start with the residential status of companies. Okay. So first, residential status of individual. Now, as far as the individuals are concerned, if you remember, there are two conditions what we had seen. I'll take you to that chapter. See, there are two basic conditions. One, the presence in India should be for greater than 182 days, and or the presence in India should be for greater than equal to 60 days, and presence in India for greater than equal to 365 days in last 4 preceding previous year. Right? These were the two basic conditions what we had seen under section 6.1. Now, if any of these conditions is satisfied by the individual, then he is considered to be the resident. If any of these conditions is not satisfied, he is going to be considered as non-resident, right? For the individual who is an Indian citizen going outside India during the previous year as a member of crew of Indian ship, or Indian citizen going outside India during the previous year for the purpose of employment outside India, or Indian citizen or person of Indian origin being outside India comes on visit to India when the total income is less than equal to rupees 15 lakh. Right? Then in that particular case, you have to consider the 60 days condition as the 182-day condition. You have to consider 60-day condition as the 182-day condition. For the Indian citizen or person of Indian origin who being outside India comes on visit to India and has total income from other than foreign sources more than rupees 15 lakh. Then he is then for that individual, you have to consider 120 days instead of 60 days. So you have two conditions then, 120 days during the previous year, you should have presence, and for the last 4 preceding previous year, you should have more than 365 days. More than equal to 365 days, right? Then you are considered as resident. Now, these were the basic conditions. Fine. We had also some additional condition because you need to then determine whether a person is ROR or RNOR. Why it is important to determine whether a person is ROR or RNOR? Let me see. What do you answer? Why is it important to determine whether a person is ROR or RNOR? Which chapter you are finding difficult, Viraj? Okay. Why is it important to determine whether a person is ROR or RNOR? Yes, Kaushiki, to tell about the scope of income. For ROR, global income is taxable. How about RNOR? Viraj, not to determine tax rate and give benefits. The benefits are almost same or the tax rates are almost same whether it is for ROR or RNOR. It is mostly for NR that you have the different tax rates. For RNOR or NR accrue or receipt to be seen, no, Kaushiki, it is only for NR you see the accrue or receipt. RNOR, yes, we do see in case whether the foreign income is accruing or receipt in India, that is to be seen for everybody. That is true. But the main thing is that what is the scope of total income? Once you say the scope of total income, the accrual or receipt is embedded into that. What is the taxability or what is the scope of total income for RNOR? Yes, we have done this. Yes, students. Yes, Kaushiki, if accrual, receipt or control in India, then taxable, partially yes. So for RNOR, only the Indian sourced income is taxable basically, unless if the business or profession which is outside India is controlled from India or managed from India, then in that particular case, for RNOR, that is also considered in the scope of total income in India. Okay, so that is why it is very important to distinguish between ROR and RNOR. Now, if you see, what are the additional conditions? The additional conditions are that that individual should be resident in 2 out of 10 previous year and the presence in India for more than or equal to 730 days in 7 preceding previous years. So both of these additional conditions, if they are satisfied, this person will be considered as ROR. If only one basic additional condition is satisfied, then RNOR. If none or any one also, then he is RNOR. Fine. Now, in case of the individual who is an Indian citizen or PIO, who being outside India comes on visit to India having the total income greater than 15 lakh, he will be considered as RNOR if he is present in India for greater than equal to 120 days but less than 180 days. For this individual, you don't need to check the additional conditions. For him, only one condition, he will be RNOR if he is present in India for greater than equal to 120 but less than 182 days. If he is present then more than 182 days, then you directly check the additional condition. Fine. Also, we had one more category of resident which is introduced very recently, which is what? Deemed residency. What is deemed residency? When will a person be deemed to be a resident in India? When he is not liable to tax in any country because of his or by virtue of his residence, and he has the total income from other than foreign sources greater than rupees 15 lakh. He would be deemed to be a resident of India, irrespective of number of days of presence in India. Even if he is not present in India for 1 day, and here he should be an Indian citizen. So an Indian citizen who is not liable to tax in any country by virtue of his residency and he has the total income more than rupees 15 lakh from other than foreign sources, then he would be considered as deemed resident. But he would be always deemed to be NOR. For him, you don't need to check any additional conditions. Viraj, what is it that you're finding difficult for determining the residential status? Now that I have explained you, are you more concerned about the individuals or the companies? So we have already spoken about individual. In case you are finding anything difficult, I would be happy to repeat anything. Yes. Okay. Fine. So this is about the individuals, right? Now, as I said, why the distinction is important between the individuals and the between the ROR and RNOR. Why is this distinction is important? Because of the scope of total income under section 5. So if you remember, we have done this as well. Section 5 talks about the scope of total income. For ROR, global income is taxable in India. For RNOR, only the income which is received or deemed to be received, or which is accruing or arising or deemed to accrue or arise in India, or the income which is accruing or arising outside India if it is from business controlled or profession set up in India. So for RNOR, only the Indian sourced income is taxable, but he has one more additional income which is taxable, which is the income accruing or arising outside India, but if it is from the business control or profession set up in India. For the non-resident, only the income which is received or deemed to be received or income accruing or deemed to accrue in India is taxable in India. Are we clear? So this is for the residential status of the individual. I'll quickly repeat once again. What you need to first check is whether the individual has stayed in India for greater than equal to 182 days in the relevant previous year. If the answer is yes, he is a resident. Then you need to check the additional condition. What are the additional conditions? That he has been a resident in India in any 2 out of 10 previous years. And you need to check, has he stayed in India for greater than equal to 730 days during the 7 preceding previous years. If the answer to both the conditions is yes, then he will be ROR. If answer to any one or none of the condition is yes or it is no basically, then he is RNO. Again, you need to check if basic condition is not fulfilled. One of the basic condition is not fulfilled. Check the second basic condition. What is the second basic condition? Has he stayed in India for more than 60 days in the relevant previous year? If the answer is yes, then check the second condition. What is the second condition? Has he stayed in India for greater than equal to 365 days during the 4 preceding previous years? If the answer is yes to both of these conditions, then he is a resident, and again you need to check the additional condition. If the answer to that is no, then again you need to check whether he has left India during the relevant previous year for employment or as a crew of member of Indian ship. Because if he has left India for as a crew of member of Indian ship or for employment, then in that particular case, instead of 60 days, you will consider 182 days. Clear? Then if he has not left India, but he is visiting India, he is an Indian citizen or a person of Indian origin who is visiting India during the previous year, then also you will consider 60 days instead of 180 days. Sorry, 180 days instead of 60 days. But his total income should be less than rupees 15 lakh. If his total income is more than 15 lakh from other than foreign sources, meaning only from Indian sources, then instead of 60 days, you will consider 120 days. And again, you need to satisfy the second condition also, which is 365 days during the last 4 preceding previous. But he would automatically be RNOR if his total stays less than 180 days. Clear? And then there is deemed residency. I hope it is clear with you, Viraj, now. Only 2 subcontent. you remember, which is one individual never went out of India is ROR, and individual never came to India as NR. What is left is difficult to remember. See, it's not difficult to remember, Viraj. It's very simple. See, you have to only think about that there are two basic conditions. You don't think about whether he went outside India, he never went outside India, or he came out in India or not. Don't think about that. What you think is basic conditions, there are two. You have to satisfy either of them. The second basic condition is and. The second basic condition is and. You need to satisfy both of them. The first and the second, it's or. Either first A or you satisfy the B. If you satisfy A or B, you are resident. Once you are resident, check for additional. You have to satisfy both the additional conditions. And you have to see the number of days which is different for different kind of individual. For individual going outside India for employment, Indian citizen, not any individual. Indian citizen going outside India for employment, 182-day condition. Indian citizen going outside India as a crew of Indian ship, 180 days. Indian citizen or PIO coming on visit to India, having total income less than 15 lakh, 182 days. Indian citizen or PIO coming on visit to India, having total income more than 15 lakh, 120 days. And 4 years condition of presence of 365 days. And for the rest of them, there is basic or there are two basic conditions and you need to satisfy the additional condition. And then there is deemed residency. Only for the individual who is coming on visit to India for and having the total income more than 15 lakh, he will be RNO. For him, you don't need to check the additional conditions. Similarly for deemed resident. Clear? Go through this chart which is what I've prepared and try remembering out of that. There is nothing to remember basically. Once you understand the concept, you will get very clear with it how you have to understand it. Clear? Okay. Now, as far as the other than individuals are concerned, for the HUF, firm, AOP, BOI, local authority, the test is dependent on control and management. Is it wholly in India? If it is wholly in India, or is it partly in India? If it is wholly or partly in India, it is considered to be resident in India. If it is wholly outside India, then it's a non-resident. So for HUF, firm, AOP, BOI, local authority, these are considered to be resident of India if the control and management is wholly or partly in India. Even if the part management is in India, they are considered as resident of India. Are we clear? Else, they would be considered as non-resident. For HUF, again, you need to check the additional conditions in respect of the Karta of HUF. Is the Karta resident in 2 out of 10 previous years? And he has stayed in India for greater than or equal to 730 days in 7 preceding previous year. If the Karta satisfies these additional conditions, the HUF will be ROR. Else HUF will be RNOR. So HUF also has ROR, RNOR, but the firm AOP or BOI does not have ROR, RNOR. Clear? Is it fine till now? Yes or no? Yes? Okay. So let's proceed further then for the companies, which is what we are going to discuss now. Which is very, very important. Okay. So residency for the company. Now, a company is said to be resident in India if it is an Indian company, first of all. If it is an Indian company. So, an Indian company is always a resident in India. which is an Indian company. When a company is called as an Indian company, we had done this also, if you remember, the different types of companies in the basics class. Indian company is the one which is incorporated as per the Companies Act 2013. So if it is a Indian company, is the company which is incorporated as per Companies Act 2013 and 226, it's defined, right? So therefore, in that particular case, if it's an Indian company incorporated as per Companies Act, then no, Mancha. It's the company which is incorporated as per Companies Act. Yes, Kaushiki. So then it is an Indian company. Clear? And the second condition is, if the company has the place of effective management in India. Now, what do we understand by the term place of effective management? Now, place of effective management is talked about in section 6 only. Section 6 has tried to define the place of effective management. We had done this as well, if you remember. We had started with it, but of course, we have not got into the detail of it. So, place of effective management means place where key management and commercial decisions, key management and commercial decisions that are necessary for the conduct of the business of an entity. For the conduct of the business of the entity as a whole are in substance made. Are in substance made. So place where the key management and the commercial decisions which are necessary for the conduct of the entity as a whole are in substance made. That is the meaning of the poem. Now you would say, ma'am, but how do we understand what is the meaning of the key management and commercial decisions? Yes, Kaushiki. Mansha, it's not that the domestic companies are always resident. We cannot say that. Because if you remember the domestic companies, how it was defined, domestic company was defined under 222A to include an Indian company as well as a company which has made the arrangements for declaration of dividend. Now, the company which has made the arrangements for the declaration of dividend in India need not necessarily be the resident of India. The Indian company is the company which is incorporated as per the Companies Act 2013, right? Or as per the erstwhile act which was there under 1956. But a company which has made the arrangements for the declaration of dividend is not an Indian company, it is a domestic company. So there's a difference between the two. If you see, there's a difference between the two, right? So Indian company means a company which is incorporated as per the Companies Act. So in that particular case, we cannot say that Indian company is same as the domestic company. Are we clear? So what this section talks about, section 6 says that it is the Indian company which is always a resident, which is formed and registered either under the Companies Act 1956 and has the registered office or the principal office in India. But the domestic company also includes the company which has made the arrangements for the declaration of the dividend. Are we clear? Fine. So domestic company is wider term than the Indian company. Right? Okay. For other companies, you need to check the poem concept. Okay. So we were on what is poem. So poem is defined under the Act. Poem is defined under the Act. Okay, under section 6. Now, but how do you understand which are the key management and commercial decisions? Yes, tell me, what are the key management and commercial decisions? Yes, tell me fast. What do you understand by key management and commercial decisions? Okay. So understand one thing. As far as the key management commercial decisions that are necessary for the conduct of business, this is very subjective term as to what are the key management and commercial decisions. So for that purpose, the CBDT has given us the guidelines for determining the place of effective management of a company. Right? And what are these guidelines? Now, this poem concept is a substance over form concept. What is substance over form? GAR lecture. You need to look as to where the company is in substance getting managed from. Right? And how do you identify that? So the CBDT circular has given some clarity on that aspect. It has given some test. And the tests are twofold. You need to see, first of all, whether the company is engaged in the active business outside India. Whether the company is engaged in the active business outside India. So you have to check first that particular test, which is what? The active business outside India test. Now, what is this active business outside India test? Where is the company's business actively being carried out, whether it is in India or whether it is outside India? And for identifying that, again, there are tests which are given. And what are the tests which are given? Let's try and understand. So, the first condition is what? That whether the company is engaged in the active business outside India. Based on that, we start deciding as to whether the company is having the poem in India. The test for that are being determined. Are we clear? So whether the company is engaged in active business outside India. Now, for the purpose of determining the active business outside India test, there are certain conditions to be seen. Yes, Mansha, key management decisions means kind of the strategic decisions. Yes. Kaushiki, yes, where key management decisions are taken. Meetings, their head and brain in India. Yes, correct. Geeta, very correct. Yes. Okay. So now we have to see the active business outside India test. Of course, all these guidance will be important to determine the poem. But first we need to see where is the active business, whether the active business test is satisfied or not, which is called the ABOI test. Okay. This is called the ABOI test. Active business outside India test. Fine. So whether this particular test is satisfied or not. If this test is satisfied, if the answer to this is yes, we'll see what is ABOI. But if the answer to this is yes, then in that particular case, the poem is presumed to be, the poem is presumed to be outside India if this test is satisfied, meaning if the company has the active business outside India, it is presumed that the poem is outside India. There is a presumption drawn that if the majority of the business of the company is being carried out outside India, if the company has the active business outside India, main business outside India, the poem is presumed to be outside India if majority of board meetings are held outside India. So this is a presumption which is created. However, there is an exception to this. And what is the exception? If the de facto decision making, if the de facto decision making authority is not the board, if the de facto decision making authority is not the board, right? But the board has set aside its power. If the board is not exercising its power of management, such power are being exercised either by the holding company or any other person who is resident in India, then the poem will be considered in India. So, as I told you, it's a substance over form test. So, you need to see whether that in actual the board is exercising the powers of management or not. If the active business is outside India, it is presumed that the poem is outside India. The majority of the board meetings are held outside India. However, if it is found that even the majority of the board meetings are held outside India, but the board in actual is not exercising that authority, its powers of management, but the Indian resident person is exercising those powers, or the Indian holding company is exercising that power, then the poem shall be considered to be in India. Are we clear? So just write down. If the de facto decision making authority is not the board, but Indian holding company or resident Indian, then poem shall be in India. Are we clear up till now? Yes, any doubt? Any question, any doubt? Is this particular point clear that there is this presumption which is being drawn? Fine. So there is this presumption which is being drawn in respect of the companies whose active business outside India test is being satisfied. Are we clear? Yes or no? Yes or no? Very quickly in the chat box. Yes. Okay. Now, if the company is not satisfying the active business outside India test, then if the answer to this is no, then there is a two-stage test. To determine the poem. You have to first identify who is making the key management and commercial decisions for the conduct of the company's business as whole. So who is making the key management and commercial decisions for the conduct of the companies as whole? Are we clear? This is the first question you need to ask. Clear? The second question you need to ask is where these decisions are made. Where these decisions are being taken up. So that is the second question you need to ask. So first question is that who is taking these decisions? And the second one is where these decisions are being taken up. Are we clear? So, second, determine the place where these decisions are in fact made. So you need to ask two questions when you do not satisfy the test of ABOI. So if you satisfy the ABOI test, the poem is presumed to be outside India if majority of meetings are held outside India. The exception to that is that if the decision-making authority is not exercised by the board, but these decisions are being taken by an Indian resident or Indian holding company. So board is just board meetings. Let's say board meetings are happening in Singapore. All the board meetings are happening in Singapore, but there is an Indian holding company of that Singapore company, which is in fact telling those board of directors, okay, you do this particular business, you stop manufacturing of this particular product, or you do this thing, you do that thing, told by a shareholder or an Indian director. So then in that case, the board is just being a titular head. The board is just implementing those decisions and not taking those decisions. So then in that case, it will be considered that the poem is in India. If the board is not exercising the authority, but the Indian holding company or the Indian is telling, then the poem shall be in India. So that is why it's a substance over form test. If you do not satisfy ABOI, then two-stage test. Who is taking the key management commercial decision? Where these decisions are being taken. Clear? Yes or no? Yes or no? Clear? Up to this point? Yes or no? Yes or no? Shall we proceed further? Yes? Okay. Now understand one thing. What is the meaning of the ABOI test, or when is ABOI test satisfied? So what are the conditions for that? Now the conditions for the ABOI test is, there are 3 to 4 conditions which we have to see, 4 conditions basically. Number one, ABOI test. The first condition is the passive income test. What do we understand by the passive income? Passive income means that the income from purchase and sale from A. Purchase and sale from A, number one. Second, royalties, dividend, capital gains, interest, rents. So, passive income means where the income is from purchase and sale from A. And sale from A. Meaning, I should have purchase and sale from A. Or you can write it, this is confusing a bit. Let me write it like this. There cannot be sale from A. There can be sale to A, right? Purchase from A and sale to A. If it is purchased from A and sale to non-A, A means associated enterprise, related party. You'll learn about the A definition in transfer pricing. Then it's not a passive income. If it is purchased from non-A and sale to A, it's not a passive income. It should be purchased from A and sale to A. It is a passive income. So purchase and sale both should be from A to qualify as a passive income. Secondly, the royalties, dividend, capital gain, rentals is the category of the passive income. Now, what is this test of passive income? The passive income test says that if the passive income, which is my this income, wherever earned, is less than or equal to 50% of the total income. So first you have to see that the passive income should be less than or equal to 50% of the total income. Okay, so that is the first test. The second test is assets test. What is this test? The total assets situated in India. Asset situated in India should be less than or equal to less than 50% of the total assets. So less than 50% of the total assets are situated in India. Less than 50% of the total assets. The third test. Employees. Employees test. The employees in India should be less than 50% of the total employees of the foreign company. The employees in India, the employees situated in India or resident in India should be less than 50% of the total employee. Here it is not less than equal to. The passive income test is less than equal to. asset employee test is only less than, it's not equal to. So employees situated or resident in India are less than 50% of total employees. Fourth is payroll test. What is this test? The expenditure on the employees situated or resident in India is less than 50% of total payroll expense. Fine. So if all of these tests are satisfied, all these are N, all these tests are satisfied, then you have the active business outside India. And if you have the active business outside India, then POEM will be presumed to be outside India if majority of the board meetings are held outside India. What is the exception? If the de facto decision-making authority is not with the board, but the Indian holding company or the resident is exercising that authority of taking key management and commercial decisions, then the POEM will be needed. Is it fine? Yes or no? Is it clear? Yes, Kaushiki, both two tests needs to be fulfilled. Both the tests needs to be fulfilled. Kaushiki, A is associated enterprise, which is related party, which is what you will learn elaborately in transfer pricing class. So just wait for that class. Fine. Okay. So this is the active business outside India. Is it clear? So you have to see whether the passive income, what is the passive income? Income from purchase from A and sale to A. And royalties, dividend, capital gain, interest or rental. It should be less than or equal to 50% of the total income. You have to consider income as per the tax, what they have offered for the tax purpose in the law of the country where that particular company is incorporated, or as per the books of accounts if they have not, if they do not have tax or have not filed their taxes, right? Then assets situated in India are less than 50% of the total assets. For that purpose, you have to consider the average value of the assets in the country of incorporation at the beginning and at the end of the year. You have to take the average of the assets at the beginning and at the end of the year. Are we clear? If it is a depreciable asset, if it's a non-depreciable asset, then you will consider as per the books of accounts. If it's a depreciable, then you will consider what is the value of the asset as per the tax reports. Then employees in India, again, you have to consider the average employees, the employee at the start, average of the employee at the start of the year and at the end of the year, who are situated or resident in India should be less than 50% of total employees. And similarly, the payroll cost of those employees should be less than 50% of the total payroll cost. Payroll means the salary, bonus, wages, right? All the employee compensation which is there. Are we clear? Any questions so far? Any doubt or any question? Yes, if the two-stage test is satisfied, Kaushiki, it is not automatically a resident. Only the ABOI test is satisfied. Once ABOI test is satisfied, then you need to ask the question, where are the majority of the board meetings conducted? If it is conducted outside India, then the POEM is presumed to be outside India, then it's a non-resident. So it doesn't mean that if the two-stage test is satisfied, it becomes a resident. No. If the two-stage test is satisfied, then the ABOI test is satisfied. And once the ABOI test is satisfied, you need to see where the board meetings are conducted. Are we clear, Kaushiki? Yes? Okay, let's proceed further. Now, once I have seen that, let's say the ABOI test is not satisfied, then I need to see. Now, how do you identify as to who is making the key management and commercial decisions? Again, we are coming to that subjective concept of what is key management and commercial decision. So, CBDT gives some guiding principles. It says that the location will be the poem where the board exercises the authority to govern the company or are in substance making the key management and commercial decisions. It's not a place where just the board meetings are held formally. So a place where the board meetings are formally held, it's not conclusive to be the poem. Because here it asks you to determine who is making the key management and commercial decisions and where these decisions are being made. So in order to determine where these decisions are being made, you need some guidance, and the CBDT is giving you that guidance. So CBDT says, just because I'm holding the board meetings at a particular place, let's say I'm holding the board meetings in Mauritius, Mauritius does not become the place where the poem lies. If in fact, the board meetings are held in Mauritius by the board of directors, but the authority to take those decisions is coming from, let's say, the directors sitting in US. Then the poem is in US and not in Mauritius. So this is a substance over form approach, what we were talking about even under guard provisions. This is a specific anti-abuse regulation in order to curb the tax avoidance by the companies which was shifting their residency by showing their poem in any part of the world or by showing their place of management in any part of the world, especially in the low tax jurisdictions, so that they could avoid the residency and the taxability of global income. Because earlier, under the Indian law, the definition of the residency for the company was, or the test of the residency for the company was, that the company will be resident in India only if it is wholly managed from India. So what these companies used to do is, they used to just hold some board meetings outside India and say that it's not wholly being managed from India and therefore it's a non-resident of India. Even the majority of the time it was being managed from India. So this is a specific anti-abuse regulation in order to tackle that kind of tax avoidance where the companies are effectively being managed from India. So just because formally there is a place where the board meetings are held, that place does not become the poem. It is the place where the key decisions by the directors are in fact taking place, other than where just formally they are executed. Are we clear? Now, let's say, for example, the head office of the company is shown, let's say, in USA. But the board meetings are done, let's say, in Bombay. Now, in Bombay, where the board meetings are held, there is no activity of the company in Bombay. The activity of the company is entirely in USA. But the board meetings are taking place in Bombay. The company is being effectively managed from Bombay. Then in that particular case, that is the place where the poem is. Are we clear? So you have to see where exactly the key management and commercial decisions are being taken up. It could be the head office of the company also. It could be a place distinct from the head office. It could be a place where there are no commercial operations of the company. So head office of a company is always an important area to decide, okay, this is where the company is taking the decisions, or this is where the company is basically operating from. That is always an important factor to determine poem. But it's not always that the head office, it will not always be a conclusive answer that yes, this is where, let's say, the head office is and that is where the poem will be there. No. So if the company's, let's say, senior management and their support staff are sitting in a particular location, and that is the principal place of business, let's say New York. That is the headquarter. The poem could be in New York. But let's say, for example, if the company is very decentralized, and let's say the company has offices in several countries, then how will you decide where is the head office? It will not be just in New York, because the company is not operating in New York only. It's operating in multiple regions. So then you need to take into consideration where the senior management is predominantly based. Where is the senior management of the company sitting? What do we mean by the senior management? Senior management means the person who are generally responsible for developing and formulating the key strategies and policies for the company, who are deciding the framework for how the company is going to operate, who is taking the calls. Let's say where I have to start the manufacturing, let's say where I have to discontinue the operations, let's say how do I have to take the finance, which product do we need to start with. All these are key strategies. Not just, let's say, for example, whether we have to hike the salary of the employees or not. These are not the key strategies. The main decisions which are driving the company. So where this senior management is sitting, where these managing director, chief executive officer, chief financial officer, CEO, CFOs are sitting. So that is where you have to see, okay, if they are sitting in a particular place, then the head office may be based there, where they are predominantly operating. If let's say they are also not based in one location, so where exactly they normally return to after traveling, because the CEOs, CFOs generally travel from different places to conduct their business operation. So where they normally return, where they specifically meet while deciding the key strategies. Because members of the senior management, they usually operate from different locations. They sometimes take the decisions even with the flights. They take the decisions via video conferencing. So then where do you decide? Where is the head office? Where is the poem? So then you will take a call based on where the highest management, MDs, CFOs are sitting, where they are normally returning to after, or where they are specifically meeting. In case you're not able to decide because the senior management is so decentralized, they are so much traveling that it is not possible to determine a single location, then the head office would not be much relevant. Then you need to decide where the executive committee or the board meetings are generally taking place, or where the senior management is usually residing. That may be a relevant factor. Because let's say they are doing the meetings through video conferencing, through Zoom, and every director is located in different countries. Then how do you decide? So where they usually reside, CBT says where they usually reside may be a relevant factor. Because then you are not able to determine a single place. Are we clear? Let's say if the board is not exercising the authority, it's setting aside its authority, and the decisions are in fact taken up by somebody else, by some executive committee. There may be certain committees which are formed which consist of the key members of senior management. In that case, the board is just implementing those decisions. Then in that case, the poem will be where the members of the executive committee are based, and where these committees are formulating the key strategies and policies. Are we clear? Or let's say, for example, whether the shareholders' decisions will be relevant factor for determining the poem. Whether where the shareholders are taking the decision, will that be a relevant factor? So see, generally the decisions are taken by the board of directors. There are only few decisions which are reserved for the shareholders' approval under the company law. So generally those decisions are for considering the dividend or dissolution, liquidation or modification of the shareholders' rights, right? They do not affect the company's business as a whole. They are just for the matter of approval from the shareholders. Because in fact, the shareholders are the owners of the company. They do not affect the conduct of the business. As regards the conduct of the business, the decisions are taken by the board of directors. So the place where the shareholders' decisions are taking, these, very basic decisions with regard to the change in their shareholder rights, or basically with regard to dividend or dissolution, liquidation, whatever. These are just small decisions. They will not affect the determination of POEM. However, where it is seen that the shareholders are actually involved in directing the board of directors to take the decision, and the board of directors are just implementing the decision, then in that case, the place where the shareholders are based will be key point to decide the POEM. If the shareholders are involved in directing the board of directors to take the decisions, that will be the place where the POEM is. Otherwise, these small decisions or day-to-day operational decisions are not relevant. Are we clear? In case you're not able to find answers, then you can also look about place where the main and substantial activity of the company is carried out, place where the accounting records of the company are kept. Fine. Any questions so far? Any doubt, any question? Yes. A POEM is a tool to curb tax avoidance, Mansha. ABOI is a test to identify the POEM. Clear? ABOI is not a tool to curb tax avoidance. ABOI is to identify POEM. POEM is a tool to curb tax avoidance. Fine? Okay. Now, understand one thing. Just because a foreign company is owned by Indian company, let's say there is a wholly owned subsidiary of a Indian company in foreign, will that lead to a fact that the POEM is in India? The answer is no. The fact that the foreign company is completely owned by Indian company, the fact that the Indian company is a wholly owned subsidiary in foreign, it doesn't mean that the POEM is automatically in India. Because that foreign company may be independently managed by the board of directors of the foreign company which are outside India. So that does not lead to a fact that the POEM is in India. So just because a foreign company is owned by the Indian company, that will not be a conclusive evidence that the POEM is in India. You still need to check these conditions. So, wholly owned subsidiary of Indian company does not lead to conclusive evidence that POEM is in India. Similarly, if let's say, for example, if the foreign company has a permanent establishment in India, a branch in India, that does not lead to a fact that the POEM is in India. So, if foreign company has branch in India, or you can write permanent establishment in India, that does not lead to having POEM in India. The fact that some of the directors of the foreign company reside in India, that does not mean the POEM will be in India. Yes, if those directors are taking the decision, if the Indian company is taking those decisions in instead of the board of directors which are there outside India, then yes, the POEM will be in India. But just because the directors are Indian resident, that automatically does not lead to conclusion that the POEM is in India. Fine. If foreign company has Indian resident directors, that does not lead to having poem in India. The fact that the local management is situated in India, there is a possibility that there is a foreign company, they have made some local management sit here to perform the operational activity, to perform the routine tasks which are there. It's quite possible, right? That there are some routine tasks which are assigned to this particular company, which are day-to-day in nature. For example, some of the examples could be some operational decision, salesperson there to decide upon the sales operations here, marketing function here. These are the routine operations. So just because a local management is appointed here, that does not mean that there is a poem in India. Or let's say there are some support functions which are here, assigned here to carry out certain research in respect of the market, to perform the sales function in the India. That does not lead to the fact that the poem is in India. Fine. So having local management or support functions which are preparatory or an auxiliary in nature, does not lead to poem in India. Are we clear? So it's not that you have to look at a single test. Single test, ABOI test is there. But once ABOI test is not satisfied, decide where the board is meeting, who are the people who are taking commercial or key management commercial decision. You don't need to look at a single factor. You have to take a snapshot approach is not to be adopted. You have to look at the facts and circumstances. There is no single principle which will be decisive. You have to look at the entire company, how they are performing, who is doing what, and based on that, you have to decide. Are we clear? Now, once the AO initiates the proceedings, that the poem is in India, he has to first seek the prior approval of the principal commissioner. In case the AO proposes to hold that a foreign company is having a poem in India, because otherwise what will happen, the AO in every case will just say, okay, foreign company has poem in India. So in order to have the check and balances like we had it in GAR, here also if the AO proposes to hold that a company which is incorporated outside India, that on the basis of its poem is resident in India, then he has to obtain the prior approval of the collegium of 3 members who will be the principal commissioners or commissioners of income tax. Are we clear? So he has to take the prior approval. So before concluding that poem is in India, AO needs to take prior approval of collegium of the principal commissioner or commissioner of income tax. Are we clear? Any questions, any doubt? Yes, Anarga, all the tests needs to be satisfied for ABOI to be fulfilled. Okay. Okay, let's do some questions so that you understand how the ABOI test is satisfied or not. Are we clear? So let's do some questions and then you will be very clear with this. So example 1 from your module itself. Let me just share you the screen of the module so that you can Yes, example 1. Company A is a sourcing entity for the Indian multinational group incorporated in country X and is 100% subsidiary of Indian company. The warehouses and stock in them are the only assets of the company and are located in country X. All the employees of the company are also in country X. The average income-wise breakup of the company's total income for the 3 years is 30% of income is from transaction where purchases are made from parties which are non-A's and sold to A's. 30% of income is from transaction where purchases are made from A and sold to A. 30% of income is from transaction where purchases are made from A and sold to non-A. And 10% of the income is by way of interest. So, determine whether ABOI test is satisfied or not. Yes. Yes, Kaushiki, you are saying it is satisfied. So here the information is given about first the passive income. So 30% which is there from AE and sold to AE, purchase and sale both to AE, that you will consider, and 10% interest. So only 40% of the total income is the passive income, right? So it is less than 50% of the total income. So the first test is satisfied. No assets or employees are in India. So that is also fine. Therefore, the company is engaged in active business outside India. That's very clear. So that the answer is correct. Yes. Collegium means the group of 3 principal commissioners, Checo. Fine. So, Kaushiki, even if the payroll is not given, so it means that if the employees are not there, obviously the payroll is not there. Geeta, how is it not satisfied? It is satisfied, right? Because less than 50% of the total income is passive income, isn't it? Yes. Okay. So it is satisfied. Let's do the next question then. Example 2. The other facts remain same as that in example 1, with the variation that ACO has a total of 50 employees. 47 employees managing the warehouse, storekeeping, and accounts of the company are located in country X. MD, CEO, and sales head are resident in India. Total annual payroll expenditure on these 50 employees is of 5 CR. The annual payroll expenditure in respect of MD, CEO, and sales head is 3 CR. So everything remaining the same, which is the passive income test remaining the same. Now your information is also given about the employees and the payroll expense. Yes, very quickly. ABOI test fail. Yes, Kaushiki. So if you see here, again in the example 2, the passive income test is satisfied that it's less than 50% of the total income. Now, more than 50% of the employees are also situated outside India. So, meaning the employees in India are less than 50%. But if you see the payroll expenditure test, now the MD, CEO, and sales head salary is more than 50% of the total salary because it's 3 CR out of the 5 CR total payroll cost. So, therefore, the company is not engaged in a active business outside India. So, it fails the ABOI test. Clear? Example 3. The basic facts are same as in example 1. Further facts are that all the directors of ACO are Indian resident. During the relevant previous year, 5 meetings of the board of directors is held, of which 2 were held in India and 3 outside India, with 2 in country X and 1 in country Y. Yes. Yes, Mansha. Yes, Chekhov, correct. Now, what about example 3? Yes, Kaushiki, the poem, whether in this case is in India or outside India, in this case, the poem will not be in India, Kaushiki. Why? ABOI test is satisfied. Yes, that was concluded in example 1 itself. So that is very clear. But what about the poem? No, Kaushiki, poem is not in India. What is the condition? If ABOI test is satisfied, poem will be presumed to be outside India if majority of the board meetings are held outside India. In this case, out of the 5 meetings, 2 were only held in India, 3 were held outside India. So majority of the meeting, meaning more than 50% of the meetings are held outside India. So poem is presumed to be outside India. The fact that the company is having all the Indian resident directors will not matter. I told you the same thing. Just because I have all the Indian resident directors doesn't make any difference. You need to check the poem conditions as is. ABOI test is satisfied? Yes. If it is satisfied, the poem will be presumed to be outside India if the majority of the meetings are held outside India. In this case, majority of the meetings is outside India. Mansha, frequency of meeting does not matter. How many meetings are in India and outside India? That's what matters. Okay. Next one. The facts are same as in example 3, but it is established by the AO that although ACO's senior management team signs all the contracts for all the contracts above rupees 10 lakh, the ACO must submit its recommendation to BCO. And BCO makes the decision whether or not the contract may be accepted. It is also seen that during the previous year, more than 99% of the contracts are about 10 lakh. And over the past years, also the same trend in respect of the value of contribution of contract about 10 lakh is seen. What is trying to say? Now, BCO is the parent company of ACO. BCO is resident in India. Now, the fact that the board of directors are not exercising the power because senior management signs all the contract, but it submits its recommendation to BCO and then BCO decides whether or not to accept the contract. Are we clear? So therefore, it's the BCO who is taking the decision and not the senior management of ACO. So therefore, in that particular case, even if majority of the board meetings are held outside India of ACO, the poem in this case will not be presumed to be outside India because this falls under exception. What was the exception? If it is seen that the decision making is not taken by the board, but by the Indian holding company or Indian resident, then the poem will be renewed. So in this case, the poem will be in India and it will not be presumed to be outside India because this falls under exception as BCO is deciding whether or not to accept the contract and not the ACO. Are we clear? Last one. An Indian multinational group has a local holding company, ACO, in country X. ACO also has 100% downstream subsidiary BCO and CCO in country X and DCO in country Y. ACO has only income by way of dividend and interest from investment made in its subsidiary. Place of effective management of ACO is in India and is exercised by the ultimate parent company of the group. Subsidiary B, C and D are engaged in active business outside India. Meetings of the board of B, C and D are held in country X and Y respectively. What will be or where will be the poem of B, C and D? Yes. No, Jacob. The poem will not be in India. Why you are saying that the poem is in India? What is your reason for saying that? Why do you say so that the poem is in India? On what basis? Yes, Kaushiki, poem will be outside India. So in this case, Jacob, if you see, just because that the B, C and D is owned by a company whose poem was in India, it does not automatically lead to conclusion that even the B, C and D have poem in India. No. Merely because that the poem of the A co is in India, it does not mean that its subsidiary's poem will also be in India. If you see, the question clearly says that the meetings of board of B, C and D are held in country X and Y. The ABOI is also satisfied. So B and C's and D's poem will be presumed to be outside India. Are we clear? So you do not have to come to the automatic conclusion. Clear? Are we clear? Last one point before we take a break, which is that this particular poem concept does not apply. There is an exception to companies having the turnover or gross receipts less than 50 crores. Companies having turnover or gross receipts greater than 50 crores will only have this poem test. Are we clear? For companies having turnover or gross receipts less than 50 crore, the poem test is not applicable. Again, this is clarified by the CBDT. Now, CBDT clarification is very vague, which is, it's in a way saying that the poem guidelines will not apply. Then it says that section 6(3) in fact will not apply to a company having turnover or gross receipts less than 50 crore. Meaning the companies having turnover or gross receipts less than 50 crores will always be non-resident. So it's a very vague. They wanted to say that the guidelines will not apply to a company having turnover or gross receipts less than 50 crore. But what they have inadvertently said is, which is what is being the opinion, that it will not be, legislative intent to in fact not apply poem to company less than 50 crore turnover. That was never the legislative intent, but CBDT has clarified in this respect. So let it be as it is. So at the moment, the companies having turnover or gross receipts less than or equal to 50 crore will not have the poem applicability. It's only on the companies having more than 50 crore turnover or gross receipts. Fine. Shall we take a small break of 10 minutes? Mansha, just to exclude the small companies out of this determination of poem requirement, which is like a very substantive test. Okay. Let's take a small break of 10 minutes and then we get back. So one more question we will solve from your module. Okay. Let's solve the question from your module first. Okay. Look at this particular question, illustration 1. ABC Inc., a Swedish company headquartered at Stockholm, not having a PE in India, has set up a license office in India, in Mumbai, in compliance with RBI guidelines to look after its day-to-day operations in India, spread awareness about the company's product and explore further opportunities. Liaison office takes decisions relating to day-to-day routine operations and performs support functions that are preparatory and auxiliary in character. The significant management and commercial decisions are, however, in substance made by the board of directors at Sweden, determine the residential status for ABC Inc. Yes, tell. Very easy question. NR. Yes, very clearly it's NR because here the liaison office is clearly performing only the preparatory function, right? It's into the day-to-day operations. So therefore, it's not the place where the key management and commercial decisions are taken. So it's non-resident. Okay. Now let's solve few more questions around this. Okay. Let me give you a question. Write down. AINC is a company incorporated. AINC is a company incorporated in Switzerland, or let's write UK. In UK, 60% of its shares are held by I Limited, a domestic company. AINC has presence in India also. Fine. The data relating to AINC are as under. Particulars: India, UK. Fixed assets at WDV. Fixed assets at WDV. For tax purposes, this is rupees in crores. 90, 70. Intangible assets. Intangible assets, 40, 180. Other assets, 30, 90. Income from trading operations. Income from trading operations. 1542. Income from investments. 13. Number of employees. Resident in respective countries. 40 and 60. This is not in crores, okay? You can write down not in crores. State whether the company has active business outside India or not. That's your first question. Secondly, your question is whether company is engaged in active business outside India. Secondly, because of increased operations, more manpower is required. "30 more employees may be required in this regard. The company can take these employees either directly on its payroll or can outsource the operation to external agency. Which will engage the 15 employees in its role and finish the work. Which choice will be better for the company? This is your past exam question only. So yes. Give me at least the answer for the first. I'm not expecting answer for the second one. That's what we will discuss. So you're required to give me the answer for the first. Yes, what is the answer? Yes. Yes, Kaushiki, 30 more employees. Fulfilling ABOI test. Yes, Mansha. Okay, let's try and see what it says. So, if you see, first test is the passive income test. Okay, first test is the passive income test. Now, income from trading operations, you have to consider the total income, right? Now, income from the trading operations is 15 crores, right? Then income from investments. This is what your passive income is because that is your interest income. So 30 crores plus 42 crores and 13 crores. That is your total income. Now your passive income, only whether you will consider the Indian income or the entire income. Passive income, you will consider only the income in India or entire income. Tell me very quickly. Yes. Only Indian income or entire income? Past. For that ABOI test, which income will you consider? Yes, past. Entire. Yes, correct, Kaushik. Yes, Mansha. You will consider the entire income. So here you will consider 43 crores, which is there, divided by this entire amount, which is there of the passive income, which is 100 crore. So it will be 43%, which is less than the 50%, right? So passive income test is satisfied. It is less than 50% of the total income. It is 43%. 43 crores divided by 100 crore. First test is satisfied. Okay. Next, asset test. So if you see here, the total assets again we will consider, which is 90, which is the fixed assets plus 70, intangible of 40 plus 180, and other assets of 30 and 90. So this is your total assets, and in India are 90, 40, and 30. So again, it is less than the 50%. So asset test, if you see, is less than the asset test is again satisfied. So assets situated in India less than 50% of total assets. This is how much? 160 crore divided by 500 crore. This is 32%. Again, this is satisfied. How about the employee test we have then? We have the employee test. So as far as the employee test is concerned, how many employees are there? 40 employees are there in India, right? So 40 out of 100. So again, this is 40%. So even this test is satisfied. There is no information given about the payroll expenditure. So it will be assumed that the payroll test is also satisfied. Payroll test assumed to be satisfied. And therefore, active business outside India test is satisfied. So that is done. Now what it additionally asks you is, because of the increased operation, more manpower is required. Now company is contemplating two options, either to hire 30 employees on its payroll directly or outsource this to an agency where the agency will hire 15 employees. Now, whether in this case, which option will be suitable for the company? Now, can one say that these 30 employees, if it gets included, whether the employee test is satisfied or not? What is your answer? If 30 employees are considered, what will be the answer? Yes. If 30 employees are considered, what will be your answer? Quickly. Yes. So if 30 employees will be considered, then Kaushik, you are saying it's better that you outsource the employees, outsource this work rather than hiring, because the ABOI will be failed. The employee test fails because it goes to 53%, right? Because if 30 more employees will be hired, then it will be 53% and the ABOI test will fail. Now, if I hire 15 employees through the agency, whether these 15 employees will be considered in my employee test or not? How Viraj employee test is satisfied? It's not satisfied, right? It's 53% if you consider 30 employees. But what about the 15 employees? Will I consider this as part of my employees or will I not consider it? What do you think? These 15 employees, will I consider it or not? Yes. Will I consider this or not as my income? Sorry, as my employee? Yes. Fast. 15 not considered. No, we will consider Kaushiki. So if you see in this particular case, what the employees will include. So as per the CBDT guidelines, the employees will also include person, though who are not employed directly by the company, but for the which are for the employees. So you can write it over here for the second question. The employees shall include not only employees employed by the company, but even personnel engaged on the task, or you can say personnel not directly employed by company, but performing tasks similar to employees. Now, even if you consider this 15, so this 15 will be included in employees. So if you consider this particular 15, whether ABO is yes. ABOI test is satisfied or not? The ABOI test is satisfied, right? So even then it is passed. So what is the better option? The better option seems to be to outsource this to the agency, right? So you can write down the better choice is to outsource to agency, as still be satisfied. Clear? Yes or no? Next question. ABC Limited, an Indian company, set up Germany. ABC on 1st April 2022. The subsidiary company is mainly engaged in software services, hardware services, etc. in 3 different countries: Germany, UK, and India. The following information is furnished by ABC Inc. for financial year 22-23. Value of asset as per books of accounts, rupees in crores, 24-12-24. Number of employees working, number in thousand, 30-10-28. Payroll expenditure, rupees in crores, 4, 2.6, 5.4. Total income earned is 8. Breakup of total income is given. 28 crores is derived from the transaction. Sorry, this is 80 crores. 28 crores is derived from the transactions where purchases are made from AE and sold to non-AE. You can write down further, rupees 24 crores derived from transaction where both purchase and sales are made from or to AE. Rupees 16 crores derived from transactions where purchase are made from non-AE and sold to AE. Rupees 8 crores by way of income from capital gain, and rupees 4 crores by way of interest. During the financial year 22-23, total 5 board meetings were held. 2 in India, 1 in Germany, and 2 in UK. Based on the above, determine the residential status. Yes. Yes. Yes, Kaushiki, correct answer. Yes, Anarga, correct. Yes. Fine. So let's discuss it very quickly. Now you would have understood the entire poem concept. First test is the passive income test. Now with regard to the passive income, what is my passive income? My passive income is entirely 80 CR, right? Out of which my total income is 80 CR. What is my passive income? 24 CR where the purchase and sale are both made from or to AE, that is 24 CR. Then 8 CR you will consider, which is income from capital gain, and 4 CR, which is the income by way of interest. So 36 CR is the passive income, and out of which 80 CR is the total income. So passive income test, 36 out of 80 CR. So this is 45%. This is satisfied. Asset test. Total asset in India is 24. So 24 divided by 60 crores into 100 is 40%. This is also satisfied. Then employee test. This is again 28 out of 68 into 100 is also 41%. This is also satisfied. Right? Payroll test. This is 5.4 out of 12. Again, this is coming to 45%. So this is satisfied. So ABOI is satisfied. So poem will be presumed to be outside India if the majority of the board meetings are held outside India. Now, if you see out of 5, 3 meetings are held outside India. So poem outside India as majority meetings outside India. Fine. Clear? Yes or no? Is the poem concept clear? Yes, but practically also you would know more than people knowing poem. Isn't it? So rest of the poems are easy, but this poem is more easier. Is it right? Okay. Perfect, Viraj. Yes. So after this class, I will request you to please revise, okay, entire topic what we have done. Yes, Chekhov, I'll explain again about the previous question on 15 employees. So I will request you to go through it once again. See, when you do it in class, right, it's very easy to understand. But when you sit and do it at home again, do this after every particular topic whenever you are, listening to any class. I used to do it at least in my CA final. I used to attend my classes, go back home, study again what they said it in the class, look at the sums, what they solved in the class, and then again, try to assimilate that information. It makes much more clarity. So in the next class, you can, ask me the questions. And in fact, you will be, thorough with the subject. Okay. So do that. Yes, Jacob. Now your question is for the 15 employees, which is there in the last question. See, the poem guidelines say that the employees will not only include the employees which I'm directly employing, it will also include the personnel which is not employed by me, but which is performing the similar task as my employees would have performed. So therefore, this 15 will also be included in the employees. Though they are not my employees, the agency is hiring, but this would also be included. But despite including this 15, I'm still meeting my ABOI test. So therefore, it's better to engage the agency rather than to hire 30 myself. Okay? Fine. Is poem concept over? No. The poem concept is not yet over. We are still to understand one more important area in this. Okay? Now, what is this area? Write down. Transitional provisions. Now you will say, ma'am, just now we understood the poem concept. Now you're coming with another new concept. What is this transitional provision? This is nothing difficult. Let me explain you. See, when a company will have the poem in India, so all of a sudden this company was incorporated outside India. It was resident of some other country. Now suddenly it is becoming resident in India. The way we have, ROR, RNOR, why RNOR was developed? So that a person who always remained outside India is not suddenly burdened with the responsibility of a resident, ROR. Because ROR has to file its return, ROR has to pay the taxes on the global income, ROR has to disclose the foreign assets. RNOR, if the person who is becoming resident for the very first year, if he's burdened with so much responsibility, he would have already income outside India. He would already have assets outside India. So this person will get burdened. That's why we had this RNOR, so that we give a breather of 2 years, right? But in company, there is no similar mechanism. A company is resident means it's a resident. Its global income will be taxable from first year. So imagine the hardship which a company is put into when it is said that tomorrow onwards you are resident of India. So that is why there is a need of putting a transition mechanism so that a smooth transition is paved for the company. Right? So that is what is this transition mechanism about. This is provided in section 115JH. And there is a notification which is issued in this particular regard. So a notification is issued for that by the central government. Now what this notification provides? It provides for determining the WDV. Because say this year onwards, the company has become resident. Now if it has become resident, it will offer its income. If it is offering its income, it will also claim the depreciation. But on what value? It has never maintained the books of accounts in India. How it will calculate its WDV in order to claim the depreciation? So how it will do that? So for that purpose, the notification provides the mechanism for computing the WDV. So determination of opening WDV. Now, if the foreign company is assessed to tax in the foreign jurisdiction, where it has taken into account the depreciation for computing its taxable income. So, if foreign company had claimed depreciation against taxable income in foreign country, then the WDV will be as per the tax record as on the first day of the previous year. Fine. So WDV as per tax record in the foreign country as on first day of previous year. Okay. Where the WDV is not available as per the tax records, then the WDV will be calculated assuming that the asset was installed, utilized, and the depreciation was actually allowed as per the laws of that country. If the WDV is not available as per tax records, then what you'll do, you will apply and compute the depreciation which is allowed under the laws of that country, and the WDV which is arrived after that, that will be your WDV. If the foreign company is, let's say, not assessed to tax in the foreign jurisdiction, then the WDV as per the books of accounts. If foreign company not assessed to tax, then WDV as per the books of accounts as on the first day of the previous year. Okay. Fine. Now, let's say the profit and loss account and balance sheet. The foreign company will be required to prepare the profit and loss account, the balance sheet, for the period starting from the date on which the accounting year begins up to the 31st March. There, the accounting year may be different than what we have the previous year in India. So, it is required to prepare its profit and loss account from the accounting year till 31st March of the preceding year, and then from 1st April to 31st March in the year in which it has become resident. Are we clear? So let's say, for example, if the accounting year of the foreign company is a calendar year, January to December, and let's say the company becomes resident in India during previous year 22-23. Now the company is required to prepare the profit and loss account and balance sheet for the period 1st January 22 to 31st March 22. Right? So let's say, for example, for the profit and loss account and balance sheet, if let's say the accounting period is Jan to December and the company is resident in India because of OM, let's say in financial year 22-23. So it will have to prepare balance sheet and P&L from 1st January 22 to 31st March 22, and then from 1st April 22 to 31st March 23. Because that's how we will get to know what was its transaction. That's how you will get to know what was the carry forward of loss, what was the unabsorbed depreciation, right? But if you see now, the period from 1st January 22 to 31st March 22 is less than 6 months. So then the notification says that if this period is less than 6 months, if this period, this is less than 6 months, then it says that you include this period in the preceding accounting year. Meaning you make a balance sheet period then of 15 months. But you get it, right? So the notification says if this period is less than 6 months till 31st March, then you prepare from 1st January 2021 to 31st March 2022. Meaning prepare for more than 3 months. You extended the period. Are we clear? Let's say, for example, the accounting year was, if let's say the accounting year was, let's say July to June. Let's say it's July to June. Okay. 1st July to 30th June. And let's say the company is resident in financial year 22-23. Now you will have to prepare the P&L and balance sheet from 1st July. So this you have to prepare balance sheet and P&L from 1st July 2021 to 31st March 2022. This will be the first period. So from when its period start till your period. If it is less than 6 months, then you include the entire accounting year also. Here it is more than 6 months. So there is no problem. And then from 1st April 2022 to 31st March 2023. Are we clear? Fine. Did you understand this? Yes or no? Yes or no, clear or not? Quickly in chat box, is this clear? Okay. And then it also says, how about brought forward losses and unabsorbed depreciation? See, it is becoming a resident in India. Now, if this global income is being taxed in India, it should also be allowed to brought forward loss and unabsorbed depreciation. Now, how will you calculate brought forward loss and unabsorbed depreciation? Because it was never taxed in India. So then the notification says that the brought forward loss and unabsorbed depreciation will be if the foreign company is assessed to tax in foreign country. If foreign company assessed to tax in foreign country, then you will take the brought forward loss and unabsorbed depreciation as per the tax record as on the first year of the previous year. So, brought forward loss and UAD as per tax record as on first day of the previous year. Fine. There is an echo. Voice is unclear. Is it still appearing like that? I don't know. There is no problem at my end. Is it clear now, guys? Yes or no? Is it clear? अशोक जी आवाज बराबर आ रही है क्या? अशोक जी नहीं, अभी भी बच्चे कह रहे हैं कि आवाज नहीं, सब लोग कंप्लेन कर रहे हैं आवाज के लिए. Okay. Guys, can you please refresh your page because there is no problem which is there at my end. Can you please all refresh your page once? Is it audible now? I'm so sorry for the technical disturbance which you guys have to face. Please, can somebody confirm it's okay or all right now? Okay, Kaushiki. Yes. So what I was talking about is brought forward loss and UAD. So if foreign company is assessed to tax in foreign country, then you take the brought forward loss and UAD as per the tax record as on the first day of the previous year. In case the foreign company is not assessed to tax in the foreign jurisdiction, then the brought forward loss and UAD, you will take it as per the books of accounts and on the first year of the previous year. And that's why you need to have your balance sheet and P&L, right? If foreign company not assessed to tax in foreign country, you will take as per books of accounts as on first day of previous year. Okay. And this brought forward loss and unabsorbed depreciation will be deemed to be the brought forward loss and unabsorbed depreciation as per the Indian law, and that will be allowed to you to be set off and carry forward in accordance with the provisions of the Income Tax Act for the remaining period calculated from the year in which they occurred for the first time. So it's not that you will be allowed the fresh losses from once you have become resident. No, They will be allowed to you for the remaining period. Let's say these losses had been incurred 5 years back. So you will be allowed to carry forward these losses for the next 3 years because the total time limit is 8 years, right? Okay. So you can write it here. The brought forward losses will be allowed to be carried forward for remaining years calculated from the year in which they occurred for the first time. Fine. Are we clear? One more important point over here. Listen to this very, very carefully. Okay? See, the notification says that the brought forward losses and the unabsorbed depreciation will be allowed to be set off only against the income of the foreign company which is chargeable to tax in India on account of this company becoming resident in India due to application of POEM. First write down and try to understand, and then I'll explain. The brought forward losses and unabsorbed depreciation will be allowed to set off only against income of the foreign company, which has become chargeable to tax in India, on account of it becoming resident in India by or due to application of POEM. Now you will tell me what is the meaning of this particular point, right? I'll give you an example to understand this. Let's say there is this AINC, a foreign company. It has rupees 100 crore as the business income from India. It had rupees 500 crore as income from operations all around the world. It has the brought forward loss of rupees 200 CR, and it has the unabsorbed depreciation of rupees 100 CR. How much will be allowed to set off? Or let me make it a little more. Let's make it 400 CR. Unabsorbed depreciation of 400 CR and brought forward loss of 200 CR. So now how much will you allow to set off? Read this line again and then tell me. No, Kaushiki. Read it once again and then try thinking about it. Yes, Geeta, very correct. Can you tell me the reason why did you say so, Geeta? Meantime, others can answer. So I'll not disclose the answer of Geeta. No, Geeta, your reason is not correct, but your answer is correct. Yes, Kaushiki, you have got your right answer. Tell me the reason. Jacob, yes, very good. Right answer. What is the reason? Yes, Kaushiki, very good. So, in this particular case, yes, Kaushiki, very nice answer. See, if you see this 100 crores which is there, this was any which way is taxable in India because this is deemed to accrue or arise in India because this is from the business income in India. Irrespective of whether or not there would have been poem in India, this 100 crores was any which way is taxable in India, right? So this is anyway taxable in India irrespective of poem, right? What does the provision say in the notification? That the losses and ULD will be allowed to be set off only against the income of the foreign company, which has become chargeable to tax in India on account of it becoming resident in India. Now, AINC, if it was not a resident in India, 100 crores was any which was chargeable. Now it has become the resident in India. So what income is becoming chargeable? This income. This income is getting chargeable because of residency. So this is taxable because of residency. So only against this 500 CR you will be allowed to set off and not entire 600 CR. Okay. So rupees 500 of brought forward loss and UAD can be set off against 500 crores and 100 crores can be carried forward. Fine. Viraj, what is 33.33? Fine. Okay. Okay. Now, another important thing is, now since this company has become resident in India, its global income is getting taxed in India, it will also be entitled to claim the foreign tax credit under section 90. What is foreign tax credit? The credit of the taxes paid in the other country. So because its income is getting, all the global income is getting taxed in India, it would have also taxed its income in other country also. Its income would have been taxed in other country also, right? So that tax will be allowed as credit in India. So it will also get, so foreign tax credit will be allowed. FTC is allowed to the company. Fine. Viraj, 200 into 100 divided by 600. No, you don't have to do it like that. So you can carry forward your balance, Viraj, right? You don't need to break up that particular amount of 200 crores into the segment of the 100 divided by 600. No. Fine. Next particular important point. Now, how about the TDS? You are already done with your TDS chapter. For the non-residents and the foreign company, which section is applicable? Which section is applicable for payment to the non-resident and foreign company? Fast. Section 195. Yes, Mansha. Yes, Mansha, in house property, property tax paid outside India is allowed to be deducted. Yes, here it's not allowed to be deducted. Here the credit is given against your tax liability. It's not a deduction which is allowed. We will be learning about section 90 in the next few lectures. So it's the credit which is allowed of the taxes paid in the other country against the Indian income tax. Yes, Geeta, section 195, section 194E is also there, but that is specifically for the sports person and all of that. But 195 is a generic section. Yes. Kaushiki, in case of individual or HUF, global income is taxable only for ROR. For other assessee, global income is taxable on becoming resident. Yes. And that's why we have this transition provision for the company. Fine, Kaushiki? In the given example, last sentence is unclear, Viraj. Which sentence? Which sentence you are saying, Viraj? Can you just highlight it? I'll just make it clear for you. Okay. Now, the TDS, I was on the point of TDS. So, TDS for the non-resident and foreign company is under 195. But now this company is becoming resident in India. So whether you will apply 194J or will you apply 195 section? Which chapter you will apply? Oh, sorry, which section you will apply? So whether you will apply 194J, 194C or whether you will apply 195. Sentence below the loss of 200 crores. It is UAD of 400 crores. It is UAD of 400 crores. Viraj. Yes. Will you apply 194C, 194J or will you apply 195 for a company which has become resident by virtue of its poem in India? Mansha, according to the status of deductee. Yes, I'm asking that only. If let's say, for example, an Indian company is paying to a company, foreign company, which has become resident in India. So let's take an example. This is the Indian company making the payment of technical services to a foreign company. Now, this foreign company is resident in India due to poem. So whether you will apply 194J or 195 on this technical services. 194J or 195. Indian company will deduct at what? Kaushiki, you are saying 195 will not apply as it has become resident. Anarga, 195 will not apply. No. 195 will apply. Mansha, 194J. Kaushiki, 194J. No, no, no. Geeta, yes, 195 will apply. Why? See, there is a principle of, under the legal interpretation, there is one principle of specific over general. There is also a Latin principle. I'm just telling you for your information. It's not something which is relevant for exam. Specialia per derogas principle which is there. Now, what does principle mean? That specific overrides general. Right? What does this principle mean? That specific overrides general. So the Latin maxim which is there, specialia generalibus derogant. Specialia generalibus This is not for exam, but this is something which, is legal principle, which I'm just telling you. So, specialia generalibus derogant. That the specific principle prevail over the general, or the general does not override the specific principle. Now, 195, which is there, is applicable to a foreign company and non-resident. This is applicable to a resident. There is a specific provision for the foreign company and non-resident under 195. And since this is a foreign company first, the specific principle will prevail, and your section 195 TDS will be applicable and not 194G. Fine. Are we clear? So here the TDS will be under 195. The payer will have to do the TDS under 195 and not under 194G. Is it clear? Fine. Now, in order to the P&L, balance sheet, income, everything else would be depreciation, brought forward loss would be in the foreign currency. At what rate you will convert it? So you will convert it as per the rate. The conversion rate will be as per the rule 115. Rule 115 rate, which is there, as per that the conversion will be made. Now, what does rule 115 provide? Rule 115, which is there, provides for the conversion rates. And the conversion rates, we are going to discuss it separately in the next class. But this is as per rule 115. Fine. Viraj, you are saying 300 is the unabsorbed depreciation. 100 is the brought forward loss. Loss will be absorbed against the 500 of the foreign income, and 100 UAD will be carried forward to next year. Now, is it right? Yes. So in this particular question, you will absorb the entire 200, which is there. And out of this 400, again, you will absorb 300. So 100 of UAD, you will carry forward it to the next year. Okay. You're correct, Viraj. Last important point about the tax rate. About the tax rate. This is extremely important. What will be the tax rate for this company which is becoming resident in India by virtue of OIM? 30%, 40%. What tax rate you will adopt? No problem, Viraj. Yes, Kaushiki, why you think 40% and not 30%? Geeta, why 40? Kaushiki, foreign company specific rate is 40, so 40. No, this is not the reason. Yes, can anybody get Geeta? Can you tell me the reason why you also think 40? Go back to the tax rates part in your notebook. To whom 30% is applicable? Have a look. What did you write in your notebook for 30% rate? Geeta, no. Go back to your page of 30% tax rate. Flip back your pages. Anarga, you wrote all company, no. What did we write over here? Yes, can anybody point it over here? Jacob, no, we have not written all company. Yes, Kaushiki, 30%. 30% does not apply to the company whose turnover exceed 400 crore. No. 30% is a general rate, but you can, okay, you are remembering like that. For less than 400 crore, it's 25%, and 30% is the general rate. But yes, what you importantly pointed out is that it applies to the domestic company. 30% rate which is there is for the domestic company and not the foreign company. Is foreign company included in the domestic company definition? What was the domestic company definition? Indian company and company which has made the arrangements for declaration of dividend. Foreign company is not a domestic company. So there is no question of applying 30%. It is straight away 40%. Foreign company whose poem is in India, is it becoming a resident or is it becoming a domestic company? Foreign company which is having the poem in India, is it becoming a resident or is it becoming a domestic company? Quickly. What is it becoming? Foreign company having poem in India, domestic or a resident? Is there a difference between a domestic and a resident company? Yes, Kaushiki, it is becoming resident and not a domestic company. So, domestic company is different from resident company. Resident company is different. This is Indian company plus foreign company having poem in India. So a resident company is not same as domestic company. Clear? So 30% tax rate will not apply. 30% tax rate will not be applicable. Very clear? So here 40% will apply and not 30% as applicable to foreign company. And what is your surcharge? 2% or 5% with income exceeding 1 CR. Okay? Fine. This is what we had done last time, right? So this is applicable to a domestic company. Foreign company, it is 2% and 5% surcharge which is there. Fine. This is for greater than rupees 10 CR. Totally. Clear? Is entire poem concept clear? Yes, 30% will be there if it declares dividend and make the arrangements. Yes. Yes or no? Entire poem concept. Very clear, crystal clear. Good, Jacob. Perfect, Geeta. Yes, Kaushiki, perfect. Now, my request is tonight, before you sleep, just flip your pages. Not saying you to revise, just flip your pages, see what we have done. Before you sleep, you will do that. Fine? Again, tomorrow, or if somebody is tired, at least I used to get tired after a very heavy class. So I used to get up as early as 3:30 in the morning. So tomorrow morning, if you're waking up very early, the first thing which you're going to do is quickly just flip through your pages. That's it. I'm not expecting anything more. Just flip through your pages either tonight or tomorrow morning once you get up. Fine. So we see you on Monday. And again, on Monday, there is very important topic which is going to be discussed, which is on indirect transfer. Okay. So thank you so much. See you in the next class. Perfect, Geeta. Thank you so much. We can close the session.